We'll be keeping a close watch on that for you, but commercial banks will now be at the liberty to charge interest rates as they please on loans. This is after the National Assembly failed to overturn a memorandum by President Uhuru Kenyatta that wanted the rate cap removed. MPs failed to raise numbers required to overturn President Kenyatta's reservations of their earlier attempt to retain the limits on interest rates at 4% above the base lending rate as set by the central bank. Only 161 members were present in the House against a threshold of 233. Now, in his refusal to assent to the finance bill, President Kenyatta said that the interest rate caps stifled borrowing by SMEs. Take a look.
Electronic, as has been displayed, total present 136. Manual present 25. Total 161. The net effect, therefore, the net effect on the motion is that the ayes have it and the motion is carried because we were not able to raise the 233 to take a vote, a vote either way. So the ayes have it, motion is carried.
The ayes have it. There you go. Moving forward, austerity measures are here to stay and they are meant to finance government infrastructure projects. These are the words of National Treasury Acting CS Ukur Yatani. He spoke to Brenda Kerubo and she began by asking him if the spending cuts to the judiciary are justified. Take a look.
To talk about the interest rate cap, effectively, are we looking at going back to 2016? Are we looking at banks behaving badly? Are we looking at double-digit rates that will be charged by these potential lenders, commercial banks?
Let me assure you, the banks then were charging high interest rate, but still the private sector was borrowing. They might be borrowing less than optimal level, but they were borrowing. So the desire was only to look at that point that, we cap it so that, banks can lend to the private sector and the private sector at a interest rate they can afford. Has that really improved the situation? So what the banks did, they just kept quiet. So the capping has not improved business environment, borrowing by the private sector an inch. Actually, borrowing has been going down. So the intended objective was not met. That's why we felt it's really important we free it, but we have other administrative and procedural measures between Treasury and Central Bank to make sure that they don't take advantage in exploiting the private sector. There will be a number of engagement and consultation between those institutions to make sure that we rein in any institution that they charge more than is agreeable.
I mean, CS, just talk to the person who's currently watching you right now and has a bank loan or is looking at even borrowing a loan and they're worried. They're thinking, oh, possibly if I go to a commercial bank right now or I have my current loan, the interest may fluctuate and they may go higher. How are you assuring them that the commercial bank will not, quote unquote, misbehave or even go back to the older regime whereby they had the double-digit rates?
Let me assure you, we're in a different times. The fact that those matters did not work then, we cannot use that as a barometer of the future. I have told you the reason as to why we went back to Parliament to ask them to remove the cap is because the intended objective was not met. If anything, the private sector went down. The figures are there. The borrowing levels kept on dropping. For some reason, the banks were not loaning to the private sector because of maybe the risk level. So how have they done it? Then they came up, with other innovative measures. And you have seen the profits they declare every year has not declined. So where are they getting money from? Now they come with other measures, maybe in ensuring that you pay more commission for withdrawal, come with other raft of other measures, which actually defeats the capping. So what we've done now with the central bank, we've agreed And we've also in discussion with the banks that we are going to observe them and make sure that they also be as being an important player. And they have assured us.
Brenda Kiruba there was speaking to the acting Treasury CS Ukur Yatani all about the rate cap and the fact that, we are basically seeing a repeal that's coming up. Now, of said that the intended objective of the rate cap was not met, and they are going to try and put measures into place so that the banks do not go in terms of whatever they feel they like to put as the interest, so that the private sector is not taken advantage of or exploited. But now we still want to stay with that conversation and bring in former Member of Parliament Joe Donde. Now, he was the man who actually proposed the rate capping law about 16 years ago, the former MP, and in 2016 it finally did sail through in Parliament. The University of Cardiff trained economist who introduced the proposed law, dubbed the Donde Bill, said he had not lost hope. So he now joins us by way of phone. Thank you so much for making time for us. Now, what is your immediate reaction to this new development with regards to the repeal of interest rate cap?
This is not surprising at all. When the president ascended to the bill, the Kenya Bank Association started straight away to try and make sure that it does not succeed. And one of the ways they did was basically to sabotage its operations so that it can be seen that it is not working. And all along for the last 3 years, they have been doing everything, including arm twisting the executive to repeal the cap. So it is something we've seen coming. The banks had initially said that they would want to put something in mechanism so that they can sort of control themselves or self-regulating. And we thought that they would probably do that before they actually ask for it to be repealed. They have not done that. And they have now arm twisted the president because the parliament, in its own wisdom, had passed this thing. But now to request Parliament to get 2/3, which they knew very well was not possible, was a way of just, blackmailing everybody. So that's the way I see it.
So you think that it was a situation where the executive was pretty much pushed against the wall to make this decision, as you've said, but you say it was sabotaged. So in these past 3 years that it's been in operation, how else do you think it would have worked out had it not had the factors that you've just said? What would a successful implementation have looked like in your view, if not what happened?
Yeah, that's a very good question, because a successful implementation was that when the interests are low, more business people and more Kenyans who wants to take part in the economy would feel attracted to take the loans, which was the case, but the banks were not giving them the loan. So the banks opened another avenue to give them loans through this mobile. And now the bank are getting 500-600%. So in a way that when they refuse to give them loan officially because they cannot assess their but they give them loans in the mobile without even accessing.
Mm-hmm.
I can just get when I go to the bank now to get 200,000, they cannot give it to me. But when I go to Cooperative Bank or KCB through mobile, they just give it to me. But they give to me at 400%. So you can see the banks themselves found another route of sabotaging the whole thing by now lending through the mobile app and getting even a bigger interest than possible without even making sure that whoever they are lending to can pay back.
Okay. And very interestingly, STAWI was launched today, where a lot of banks have collaborated in order to lend to MSMEs. And of course, President Uhuru Kenyatta also presided over the official launch of STAWI this morning. As we wrap up, your thoughts on STAWI, as well as now that the rate cap has been lifted, or is going to be, of course, what are your thoughts on what's going to happen now?
STAWI is just pulling the wool in the eyes of Kenyans, because once you've done a mistake and you want to cover that mistake, you just pull the wool on somebody's eyes. In other words, they had arranged it so that when people, before Kenya start making noise, they had arranged it that they do that tariff. But you ask me now, even if you went to the bank now, would you be able to get that loan? It's not possible. So these are just tricks by the banks, and I'm sorry the executive has fallen into the same trap. And let them make the money they want to make. I think that's what we should do for Kenyans. Let others be rich, let others be poor. I think we should resign into that.
Very strong words there, but thank you for speaking to us. And that is Joe Donde, former Member of Parliament, talking about lending to SMEs, the rate cap and the removal of the rate cap, and how he believes it was sabotaged in the fact that that is the reason it did not succeed and achieve what it set out to do. But to bring in another voice, I would like to have now Wangari Muikia. She is an economist, and we want to talk a little bit about, what you think now with regards to the rate cap. And of course, we've had Joe Donde's opinion, but what is your take with regards to the removal, imminent removal of the cap? Where do you see the future going?
Thank you. Interest rate caps, the intent, it was aimed to have an effect of having lending more affordable to the general public, access to credit, and eventually to jumpstart the economy. But if you look the world over, interest rate caps have never had a positive effect on the economy, and actually it has the opposite effect. In Kenya, as you know, it reduced the will of the bank to lend to risky applicants, reduced the access to credit to SMEs, and slowed down the economy. And not only that, it made banks concentrate their lending to large financial institutions or large companies or to the public sector, reducing access to credit for SMEs. So typically, we've never seen it work the world over. And actually, Kenya was the first quite widespread, quite stringent rate cap that has been seen globally. And as we can see, the effects were not positive.
Okay, and Wangari, this is, of course, a very different opinion that you're having from Joe Donde, who we just spoke to. But a lot of people have said that perhaps a repeal of the rate cap may be like the silver bullet that the economy needs to, wade out of the cash crunch situation that the private sector is facing. How optimistic are you that this is what will actually, take us through?
Well, for sure, it will increase the access to credit for SMEs, but at what cost? It's the interest rates that are charged for SMEs are quite high, and understandably, in a market economy, risky lenders get higher interest charged on their loans. So it's a market challenge that we're facing here. But even on the other side of the coin, companies are also going to feel the pinch of getting lending at higher interest rates, and they have to adjust structurally to be able to pay back the interest on their loans.
All right, thank you so much for speaking to us. And that is a renowned economist, that is Wangari Muikia, who was talking to us a little bit about her opinion on the removal of the interest rate cap. Of course, before her, we had a former Member of Parliament, Joe Donde, as well. So some very different views from both of them with regards to the rate cap, whether or not it served its purpose in the last 3 years, and where we're heading to in the future when it comes to the removal of the rate cap as well. But aside from that, we will be keeping an eye on the developments around that for you and giving you all the details as always. For now, we want to head into